Good day, listeners and viewers, and welcome back to the Money Mental podcast. As always, we are joined by the stalwart star of the show, Dr. Andrew Wilson. Doc, how you been?
Yes, I'm good, and I like the word stalwart. That's a good one. But I've been okay. Although you might detect in my noticeably tones that I've come down with cold, and doesn't this always happen? Here I am, up on the Sunshine Coast of Queensland, having a bit of a break. While I break the scenery, still working, of course. And guess what? I've got a cold, but it is a little bit wet outside, and it's a little bit cool, a little bit windy. So what the heck? What does it matter? And I have had one swim already, so at least I can say I've had a swim, but I'm not looking at. We're not here to talk about my circumstances. We are echoey here too, so it's just the environment that I'm recording from today. But we'll still be able to come through loud and clear. We've got plenty of data to discuss. Latest house prices and on the and unit prices for the June quarter. First with the latest, of course, mine housing market. Also, in terms of the latest, we've got the building approval data that was released just this morning from the ABS. Some reasonable news there as well. And of course, we've got retail sales released as well this morning. Retail sales for May, so we need to discuss. And very interesting data, particularly the retail sales, which is still growing. And of course, to finish off today, we will look at the latest auction results. And I've got to wish everybody a Happy New Year because we're now in the new financial year. So we can look back over the full year, your financial year anyway, to see just how our housing markets are performed. And yeah, a little bit easier, but in terms of those growth rates, most surprised. Yeah, it's still most cattles are pumping along. And but it is a fractured market in the sense that we have a divergence in results. The big three, we could call them, are still flying along, and others, so at various levels. So I've had a look at that, and as I said, also the latest auction rates, clearance rates for last weekend in June and the last weekend of the financial year. And again, some pretty positive results, despite the fact that we are in winter. And a shout out there to the folks down in Melbourne who I think got a 0 temperature there. So, good luck with that. I'm out of there at the moment, but it's nice and clear, but it's pretty frosty. So shall we get going?
Yeah, looking forward to it, Doc. I think we've got some good data points to go on this week. Over to you, please.
Thank you very much. The Mind Housing Market is my brand in Europe about the current state and future prospects of housing markets, and really about the current state. Of course, we want to know what's happening here and now. The two-day looking, which a number of data that is used in commentary around the place, does tend to be backward looking. So we use a number of different data sets and different factors to understand what's happening in our housing market. And it is this week in property that we're going to look at. All the latest data, as I've said, is really fresh off the press with most of these. Well, all the data we're looking at today. So the week-to-week state July, we're now at the second half of the year. We're counting down to summer. Can you believe? What is it? 6 months until Christmas? Oh, horror. But anyway, that's life, isn't it? With the way it marches on. So the week-to-week stage July the 3rd. Today we're going to look at June house and unit prices, the latest building approvals, latest retail sales, and as I've said, the latest weekend auction results. So June home prices were mostly higher again, and it is a rising, pricing house market, rising house prices remain a feature of most capital city housing markets over the June quarter and so far this year. It has been a solid, strong year for the housing market, prices rising generally, but there is really that clear divergence, which has emerged over recent months in results. Underlying drivers, under supply, high migration, low building, strong economy will continue to support housing market activity, although we're now starting to talk again about the prospect of higher interest rates. We've had inflation rise again over May, not good news for the Reserve Bank, is wanting obviously to set the inflation down. In fact, all those interest rate increases way back in May 22. But we are now getting, maybe discussing about potentially higher rates. The Reserve Bank has certainly said that it needs to have a substantial period of higher inflation before it even considered raising interest rates. And look, higher interest rates are offset to some degree by a still booming economy with relatively low jobless rates and near record level wages growth. So we don't want higher rates, and we want to see the Reserve Bank get on top of inflation. If that means that I think will raise up a bit, well, so be it. I think that's something down the track yet, but we've got to keep an eye on that oil price, as we discuss quite regularly here on the show. So the national house price up again. We've had 16 out of 17 quarters. These are monthly quarters. So what we look at is the 3-month period of home sales, home prices from sales, and then we track it on a rolling basis from month to month. So this is the 3 months, quarter to June versus the 3 months to May, so forth and so forth. So it gives us lots of observations. So there's no over volatility, I guess we could say, in our results, but we do get to transition it from month to month, so we can see that stronger underlying trend than if we were just using a quarter by quarter standard quarter results. In other words, if we were just comparing the June quarter with the March quarter, we're comparing it with the May quarter, so we get a better feel of what's happening in the market, and we're using a significant number of observations for our results. So national house price is still rising, and of course the national house price is a weighted average. There is no such thing as the national house, although maybe we could find one somewhere. But it is all about looking at each capital city and then weighting the numbers from each of the capital city in relation to the number of listings, number of sales. Of course, that means that we have the national house price is skewed towards the big capitals, which are Melbourne, Sydney, and Brisbane. But nonetheless, all the capitals are included in this capital city national house price. But as I said, the weighted average is skewed towards the bigger capitals. So let's have a look at the actual results. Sydney was flat over the month for house prices, up by 4% so far this year. Melbourne just is a little bit down by 1.3%, up by just 1% so far this year. But the big three continue to rise, and that's Brisbane, Adelaide, and Perth. Perth again setting the scene, charging ahead 2.7% increase June quarter compared to the May quarter, Adelaide up 2%, Brisbane up 1.3%. They're almost runaway trains, these three markets. When we look at the annual figures, quite remarkable. Perth house prices have increased by 26.8% over the past year. That is a real booming result, isn't it, Chad? And Adelaide up massive. Yeah, massive price growth. Adelaide up 16.9%. Perth, Brisbane, which just has no sense of slowing down, that Brisbane market up 18.7% over the past year. And so far this year, Perth's up 13.1%, Adelaide up 8.6%, Brisbane up 8.5%. So some really big results. As I said, some divergence clearly showing there with Adelaide, Perth, and Brisbane breaking away at the top. Sydney and Melbourne, sort of middling results there. When we look at the year and full year, like the year's results, and underperformers there are certainly Hobart and over the year Canberra. But when we look at the part, when we go back 2 years, we can see why we still think there's some value in that Melbourne market. Prices are still lower than where they were 2 years ago. We are starting to see some early signs, particularly in the rental market, of movement demand, higher demand in the Melbourne market. Sydney's just now still tracking around about where it was 2 years ago. But I think that's kept that Sydney market ticking over because of those value perceptions in Sydney. But when we look at as I said, the big three over the past 2 years, Perth prices are actually up 31.9% over the past 2 years. Now, we know Perth's coming from a long way back. It had a subdued period, when the mining boom ended, the fly-in, fly-outs finished. Their housing market really suffered for a number of years in terms of low demand, but it's certainly catching up now. And whether it gets back to where it was in at previous peaks is another question, but and catches up with the other capitals. But no doubt that the Perth market is leading the charge at the moment. So that's houses. As I said, again, that sort of multi-speed environment emerging with the big three there, as I said, Brisbane and Perth charging ahead. Sydney behind, but still growing. Melbourne struggling to get its head above water at the moment, but offering value, and we still think that there's opportunities in that Melbourne market. Smaller markets are continuing to move sideways at best. So let's say look at the unit market.
I've got a quick question for you. With the recent announcement of the increase in student visa fees, do you think that would have spooked the Melbourne market just a little bit and created that bit of retraction in price this month? Or is that just a broader trend?
I think it's a broader trend, and the student visa market is not necessarily a key driver of prices. It is, however, significant in terms of rents, but we are going to release this week the housing market rent report for June, and there's in fact the just a bit of a look into that before it's released. And Melbourne units are actually on the rise in terms of rents, so that would be the impact. But I think that impact will be will take some time to work its way through the system. But I do think that the level of international migrants will still favour Melbourne eventually as the number one destination. Seeing that with Sydney as we've seen in recent figures. So, look, government's trying everything, I guess, it takes the pressure off our housing markets, but I think these are just really marginal policies that won't have a significant effect, particularly on prices, which is really all about confidence and that undersupply, which of course is the same scenario in the rental market, but more about undersupply in the rental market. But units that have been outperforming houses lately, a better result for units over the June quarter compared to the May quarter with these results. And when we look at that, we can see that the national unit price was up by 0.7% versus 0.3% for houses. But again, as we saw with houses, it's those three capital cities that are charging ahead, and like 1.8%, the same result there was Perth over the quarter compared to the May quarter, and Brisbane up 0.7%. Hobart bounced back after some weaker months, up by 1.6%. But Brisbane, again, another strong result up by 0.7%, Sydney up 1%. So generally, some better results there overall for the units compared to but again, it's a weighted average, and it does favour the big unit market, particularly Sydney. So Sydney rises, the national unit price will rise as well. But when we look back over the past year, same result there. Look at that Brisbane result, 24.5% increase in Brisbane unit prices over the past year. Not that long ago when plenty of chat was happening about the Brisbane market being oversupplied, it was flooded with units, and it was going to take decades for it to rebound. And now, shortage of unit accommodation in Brisbane is like those other factors chronic and pushing upward prices, putting up pressure on prices and rent. But 24.5% Brisbane unit prices have increased over the past year. Perth up 25.3%, Adelaide up 17.4%. And the 2-year figures for those three capitals, Brisbane, Adelaide, Perth, are all up over 30% over the past 3 years. So that's 10% per year over that period of time. It's more than that, of course, if you take it on a year-by-year basis. But very strong results there, third time results for that. And the Brisbane market remains the most notable, as I say, because Adelaide and Perth, whilst obviously growing in price, are smaller unit markets, whereas Brisbane is a significant unit market. So there is some volatility in Adelaide and Perth, particularly given that there's been a surge in higher priced, larger units in construction in Adelaide and Perth. And that, of course, can influence the price models. But no doubt, the Brisbane market is a very strong market for units at the moment. Sydney continued to grow up by 1% over the month and up 5.3% over the year. Melbourne sort of moved sideways so far this year, very similar to what's happened with houses, but it's still above where it was a year ago, the Melbourne market, and we're still calling some potential upside to Melbourne going forward. But as you said, there's issues there that may influence that market, which it seems the government's not that worried about lower house prices or a subdued stagnant housing market, and looking towards trying to fix what's happening in the rental market, which, along with the other capitals, is in touch states to low vacancy rates and higher rents. So that's the story about house prices over the June quarter. Again, we're seeing underlying positive results. And this is now moving. Firstly, it's now moving into the quieter mid-winter housing market, which of course is a hiatus period for the housing market typically, before we get the rebound coming through late August into September, spring. And the other fact is we've had 18 months now of a reviving housing market, and that of course this cycle is dissipating, and buyers that were sitting on their hands, sellers, that pent-up demand is largely now dissipated. Higher prices are pushing some buyers out of the market. So, we expect to see this easing in activity, but given under supply of housing, a strong economy and stable interest rates, I think the growth rates will continue. But as we've been discussing through this report, we're really to be at a multi-speed housing market at the moment. So if you want to have a look at that June house and unit price report, there is a QR code, and you can take a picture of that QR code, and you can get the full report for full copy of that report to have a look at. Latest data from the ABS, not a lot of good news for our undersupplied housing market, really, even though we did see home building up. So home building approvals were up by 6.6%, which is a big rise over the month, following a 1.4% April rise. So back-to-back increases in building approvals, which is good news because we need as much building as we can get. But it was all about, once again, units, and we do see that for the month to month. You can have a very big number of approvals in 1 month because you get a big development coming through. And that, of course, skews, you can have hundreds of units approved in a single development in a month. That, of course, pushes up the results. So it's a very volatile series because of that. And that's what we saw over May, with units up 16.3%. But now it's been reasonably consistent in terms of their growth patterns, up by 2.1%. Western Australia is the top performer, up by 4.4%. But certainly when we look at those annual growth levels, they do remain depressed, and the quarterly trend rate is still low and flat, which we'll look at there. You can see how since the peak of that home builder policy period from the venues government, which created a lot of demand, of course, higher building costs as a result of too much demand incentive. That's worked its way through the system, and the trend is the quarterly trend, the dotted line there, flattening out a little bit, which is okay. But the problem is when we look at the main numbers now compared to a year ago, and these are just numbers, we can see there that this emphasises that season adjustment. We can see we're still below where we were tracking a year ago in terms of building approvals. And that trend here,
Bless you, Doc. Don't worry, the building approval numbers are also making me a little bit sick because I think what's underlying here is also the fact that the approval numbers are not necessarily where they need to be.
No, we're a long way back. We've got a long way to go, but I guess we could take some sort of positive, positive sense of the latest data. At least we're not still falling. The trend is flat and low, but at least it's not still falling. So hopefully that's a precursor of more positive signs come. But look, we're just hundreds of thousands homes short, and this is just the beginning of what would be a very long journey to find a a more balanced housing market, which is, really extremely problematic. So you can see the results there. Houses up 2.1%, units up 16.3%, overall dwelling approvals seasonally adjusted up 6.6%. But the year to date still isn't showing good numbers there, with units well down over the year to date compared to the same period last year. And over the full year, they're still well down. In fact, everything's down there, houses, units, and total. So, and that reinforces the fact that our trend, even though it's flattening, is still lower than where it was over the past year. But I guess the good news is the year to date now that houses are 5.9% higher compared to the same 5-month period last year. So that's the data on the overall national building approvals. This is the capital city building approvals, home building approvals. You can see how that's fallen basis way back in 2016, down by nearly 40% the number of approvals. This is the annual trend, so this is 12 months worth of activity up until May, and that's the trend going back on each month, taking it as a 12-month snapshot. So that's the underlying trend. We had that blip, of course, that I mentioned from home builder. Since then, we're continuing to fall away. Although, as I said, maybe just some signs that longer-term trend is starting to find its base. So that we can take that as positive. When we look at units versus houses, we can see it's really all about units. That's the base colour and background there, and they're down 56% unit building approvals since 2016. So you can see that's collapsed from well over 100,000 to under 50,000 now on an annual basis. So we have a long way to go. But housing, as I said, just looking to pick up there. That's the black chart there. Housing just starting, the trend line just starting to pick up. And we've seen that, as I said, in the national data overall. This is capital city data, but the national data showing that house building approvals are higher over the first 5 months of this year compared to the same period last year. So some better news there, but a long way to go. Certainly not good news still for units, despite that volatility that we get from month to month. This is, if we look at the capital city results, and this is the last month's data, we'll make it for April, we can see that all the capital cities are well down on their previous peaks. So it's not just one capital that's driving this undersupply. It's all of our capitals that are undersupplied, and this shows where they are compared to their previous cyclical peaks, which are shown there in the graphic. We can see there Sydney's previous peak was September 16, 2016, which of course is still the national number. Since then, overall development has been down by 30.3%. So, you can see
it's rather scary, Doc. It's almost a decade since we were at those peaks, and if you look at those numbers, you can draw a very clear line from your building approvals to your previously presented data today on price growth. It's a supply-demand equation. I mean, surely people driving policies can see this data as well.
Yeah, there's nothing much can be done once we get to ground zero in terms of underbuilding and under supply. That's just something you can do really to sort of get up and running. These systemic problems, they're cultural problems, they're problems that come from the long policies over a long period of time. And it's okay for policymakers to sort of, throw it up in the air and say, oh, well, too late, see it later. But it means that we're going to have a lot of trouble housing our population really into the years to come. And the best performance there is Adelaide, down by 23.8% in terms of its building outcomes. But some very sobering results there. Perth down 54%, Sydney down 50%. That's always a more positive building environment for housing, down by 34%, and Brisbane down 47%. So there's no real standouts there in terms of what's doing better. They're all down, and some are obviously down a lot worse. And you can see there, Melbourne's still zooming along in terms of the leadership of approvals for housing. So this is building approvals in Melbourne, or all the capitals, the major capitals, over the first 5 months of this year. So Melbourne well ahead as usual. Melbourne typically approves around about 40% of all capital city housing. So, maybe some reasons there. I don't think so that the White Melbourne market is performing a little bit better, or a little bit worse, of booming prices growth than the other capitals because it has a better supply line. And that's good news for the local economy down there. That certainly needs all the good news it can get. Now, as I mentioned, May retail sales higher again. But we noticed with when we discussed the Reserve Bank's last interest rate decision, Reserve Bank Governor conceded that the consumption data that they've been looking at was now starting to be questioned. We've been questioning that here for quite some time. The measures of consumption, so that's what people are consuming, buying, has not reflected in the retail sales data, which I think is a very good forward indicator of very good positive, general indicator of consumption is retail sales. And that's been holding up remarkably well despite higher interest rates. And, there was a bit of that preceding the consumption, they might have got wrong consumption. And again, this is validated by the latest May retail sales data. And as I discussed previously, Chad, that it's also, when we look at a booming housing market, record sales this year, that's not the sort of environment you would suggest that people are trepidatious about going out and buying things, particularly houses. Some of those consumer sentiment surveys will really get you scratching your head because they're sort of negative as well. And you have all this other data that shows consumers are out about spending and big items there are also security as well. So it's what I always say, you've got to be very wary of those surveys. And because a lot of the times the people who are interviewed say they think that's just what they actually believe. So let's get looking at the data because that shows the valid results in a sense because that pretty nice data really go across the face of what the Reserve Bank until recently has been telling us, and also consumers survey say because up by 0.6% over the month, which is actually quite a strong result. It's still up 1.7% over the past year, and it was the second rise in retail sales, monthly rise in retail sales, followed the 1.1% rise over April. So it's still some pretty strong results there. As I said, they're spending, and when you look at the chart there, retail sales, as I said, are higher than they were a year ago, but they're still significantly higher than where they were in the pre-COVID period. Of course, a lot of that surge that we've seen in retail sales has come from the stimulus packages, all the handouts we had, lower interest rates, lots of stuff really got the retail market up and running. And it's still at those levels, despite the fact, because, we're measuring the value of retail sales here. So we've had inflation, yes, so that tends to push up the value. So we have to take that into account. We've also had increased population with migration, so there's more people out there spending, so we've got to take that into account. But even if we take that into account, we're still tracking 40% plus higher than where we were pre-COVID. So that offsets, I think, the inflation impact and the migration impact. And, policymakers are starting to wake up to that, I think, at last. But it's not good news for inflation going forward and interest rates going forward because it means that the dampening of demand that higher interest rates are supposed to generate has not occurred. And we can see that. And any sense of it's a lag effect is going to happen anytime soon. Although it's 2 years or more since we started raising interest rates. And still we've got strong housing market, we've got strong retail sales, so we've got very low unemployment rate. So let's have a look at the latest auction clearance rates. So June has ended with more solid early winter results. Clearance rates are still tracking around about where they were a year ago, which was a very strong period of the market as buyers surged into markets, advantage of lower prices. So, prices fell away in 2022 as those interest rates increased. Buyers came back into the market early 23 to take advantage of lower prices. Now we're being sellers coming into the market with record numbers of listings and record post-auction sales, which we'll have a look at shortly. So we are heading into winter. which is a slower market. Of course, school holidays are on at the moment, and that winter break becomes a sort of the time of reflection with a lot of people thinking about, hey, maybe we should sell our house, buy a house, let's try and get it done by Christmas. And that really does generate before Christmas. That does really generate that spring selling season. So this is sort of the pause, get your breath after the autumn selling season and get ready for the end of year spring selling season. But numbers are still very positive, even though we are starting to see, which we would typically see in these listings, they're still very high. So let's have a look at the results. Sydney 721 options, a little bit lower than the weekend before, but this is a very big number. The final weekend in June. Clearance rate is actually higher in Sydney compared to the previous weekend. And if we go back to here, look at the difference in listings. A year ago, 363 option listings in Sydney, 721 last weekend. And the clearance rate is actually higher than a year ago, which of course was starting to be affected by school holidays. Melbourne, just under 800 options, another big weekend, considering the school holidays, considering the beginning of the winter market. A little bit down on the weekend before, which was 900. Clearance rate, a little bit lower, 63.4%. No, it's been travelling in that mid to high 60s really for most of the year. But again, when we look back to here, 347 options the same period, the same weekend last year in Melbourne. And the clearance rate not too far away a year ago also from Melbourne. So again, quite a strong start to that winter market. Brisbane also higher clearance rate, higher listings. But again, clearance rate, that's similar to the weekend before. We know that Brisbane clearance rate is typically in the mid-50s. Doesn't really sit a lot because there's different costs for options in Brisbane. And again, its clearance rate similar to a year before. But the numbers, look at that, again, nearly double the options from the same weekend last year. Same story with Adelaide. It's at a higher clearance rate. Clearance rate similar to a year ago. Australia's strongest option market, still at Adelaide market. But numbers again higher than where they were a year ago. Same story for Canberra. Canberra had a little bit of backtrack. It's been in the 60s, can you believe, the Canberra market the last few weekends. It fell back a little bit. It's still a reasonable result given where Canberra clearance rates have been recently, earlier in the year. But its listing numbers again higher, and its clearance rate actually higher than a year ago. So again, more positive signs. Yeah, but overall, these are remarkable numbers, and it shows that some flooded the markets, continue to flood the markets. Clearance rates are still reasonable. Still, you'd say overall in favour of results. That means there's good competition for available property out there. That's putting up with pressure on prices. And here we are in the middle of the year, moving into July. We're into July. So it'll be interesting to see if this trend continues over the next few weekends, where it really should be the pause in the market. Forward. So let's have a look at the trends. Sydney's still tracking over 70% over June. These are the weekend clearance rates, a little bit lower than a year ago, which was a very strong period for most of our markets to the peak of the buyer rush at that time. But still a good result there, 70% Sydney. Melbourne down on where it was a year ago, but actually increased. Its clearance rate is now higher over June than where it was over May. So we've just seen, continued to see some early signs of a pickup in that Melbourne market. We'll probably have to wait till spring to see that consolidated. Brisbane, yeah, where we expect Brisbane to be in those mid-50s, but, given where it was a year ago, which was extraordinary record levels for option results. Clearance rates for Brisbane have never seen that high, and that was a result of that migration surge that's lifted the southeast Queensland housing market over the last couple of years. Adelaide, still Australia, as I said, strongest capacity market, but down another 8% results that it was getting last year, but still very much a seller's market. And Canberra, it's actually around about where it was a year ago. Are you back, Canberra? Are you back? Well, maybe you are. Wait a lot, but we've always said that there are good opportunities in the Canberra market because it did disengage from Sydney at the end of last year and usually attracts the Sydney market. So, and our latest data is showing Canberra prices are now starting to, the proportion of Canberra compared to Sydney is now starting to pick up in terms of price results. So you get those latest option clearance rates every Saturday night on my LinkedIn site, LinkedIn around 6:30 for the headline capital city results. And then the full national report is released on LinkedIn Sunday, and that includes the regional breakdowns for Sydney and Melbourne, which is a good forward indicator of which regions are doing well or not in those capitals, and also the top 10 results from all the capitals in terms of the sales under the hour on the Saturday. So we'll get for that. And as I mentioned, we've had record auction activity. So this is sales, not listings, not a clearance rate. This is converting that into actual sales. So this is looking at the sales that we've had so far this year compared to the same period last year. Look at those results. 33% increase in Sydney, 25% higher in Melbourne compared to the same period last year. And you have a 15% increase in Brisbane, 13% increase in Adelaide. And now Canberra is now tracking above where it was a year ago, up by 3.1%. For Sydney and Melbourne and Brisbane, these are record numbers of actual sales for this time of the year. So it's still a very strong auction housing market on this metric, and we know it's a very strong forward indicator of what's happening on the housing markets. So within auction clearance rate. So we'll be watching out for those results next weekend as we get into our first July's segment of the housing market. If you want the latest copy of the auction market report, National Auction Market Report, there's the QR code. You can take a picture of that, and it will take you to the latest National Weekend Auction report for last weekend. As usual, finish off by giving a plug for the My Housing Market Infinity Suburb Data app. This allows you to look at what's happening in every suburb of Australia that has data in terms of asking prices and asking rents. It's a great little app to put on your phone or whatever. You do have to get a password from Infinity to get access to it, because I guess there's no such thing as very much, and this is a great lunch, let me tell you. So that's the link to it there, and the QR code. There's a screenshot of what you can get from this app. You can filter for prices or rents. You can filter for the capital city or the regional areas. We've looked at Sydney here, the Sydney region, and we've looked at Blackburn as that suburb. You can filter for type of property, apartments, townhouses or units, and you can also filter for the number of beds, total beds, or you can filter it down for the number of beds. And you can see there the results from the search. You have not just the median price, but you also have the high price and the low price and the number of listings. So I've given a little indicator of what's happening in the market on suburb by suburb basis. You can look at for any particular suburb you might be interested in, and look forward to a big update in this coming soon, where we'll be featuring some yield data for investors. So that'll be interesting as an update to the little app. We've got exactly the same thing for the rental market, as you can see there. So next week, we're looking at rents, June housing unit rents, latest home loan data, has been very strong for investors lately. So we'll see investors are still charging into the market. We'll also put together our rent and price data for June to look at the latest home investment returns. So we'll look at yields, gross yields for housing and unit rents, and we'll look at total returns, but we'll add those yields to capital growth. Of course, we'll look at the first weekend of July for those auction results. So if you're looking for a copy of the whole report there today, as a PDF file, there's the QR code. We've just clicked over to our finality, and I've got through it with only one big sneeze, so I thought that was pretty good. And even though we're a bit echoey here and the background's not as good as it used to be, I think given we're sort of in holiday mode, I think a lot of people out there are in holiday mode as well. I think we've done extra well, Chad. What do you think?
Doc, I was pretty impressed, and thank you very much for battling through a bit of cold to bring us that data.
Yeah, it's just a little cold. Hope you're busy to see, mate. All good. So we'll catch you next week. Let's look forward to that.
Always do, and I'm looking forward to the auction market results on your LinkedIn page as well.
Yes.
Until then, Doc, thank you so much once again.
Thanks, Chad. Goodbye.